as a trader on the floor for over 35 years. If you don't manage your risk properly, you're not going to be around too long.
35 years on the exchange floor. How did it help shape your mind as an investor?
Let me tell you something. On the trading floor, tons of egos on that trading floor. I was always adapted to change. We try to pick each other's pockets during the day, but we were friends after the market closed. My reaction was such that I actually attacked that gentleman. Other members were escorted off the floor because they were harassing women traders on the floor.
What advice would you give to hedge fund managers?
You have to have the psychological demeanor to know what's going on around you. So it all comes back to one thing: discipline.
Hello and welcome to Capital Horizons, the podcast where money meets politics. I'm Igor Yelnik. Our guest today is Dennis Rivera, the managing member of Advanced Alpha Advisors. Hello, Dennis. Thank you very much for joining the show.
You're welcome, Igor. Thank you for having me. I appreciate it. It's an honor. Thanks.
So, Dennis, you are allocating your clients' capital to third-party managers. How do you tell good managers from not so good ones?
Well, there's a process in my due diligence. I look for, number one, the character of the person. Okay, I have to understand who he is. Hopefully, if he's a former trader from the floor, that makes my job easier to filter out the noise in their presentation and interview skills and all that. But I look for a manager that, number one, has a very strict risk management policy. Because I believe, as a trader on the floor for over 35 years, that if you don't manage your risk properly, you're not going to be around too long. And, that's what kept me around for so long. So it's got to be a very disciplined risk management policy. It's got to have consistency of performance. The manager also has to be very transparent and communicate with the investor. If they don't have that transparency in the communication, I typically will not allocate to that manager. And they also have to know their compliance rules and regulations, and hopefully they are registered with the regulatory body like the NFA or the CFTC. That gives them more professionalism and respect amongst the investors that I deal with, because they only allocate to members of the NFA, so to speak. So, they have to know the rules. They have to be on top of the bylaws, the changes, and everything else. They have to have cybersecurity, obviously, because they're dealing with data that is personal in nature when you're dealing with investors and their accounts and their managed money and et cetera, wire instructions and all that. So basically, I look for those things in a manager. Also, that they have a team around them, so they're not taking on the burden of everything by themselves. Whether it's outsourced or internal, it doesn't make a difference. But as long as I know that they have somebody helping them along the way to manage that investor client's money, that is very helpful as well. And then obviously, constant communication with myself, to let me know what's going on. I like to keep track of the performance, the particular strategy I'm allocating to, with access to portals from the different FCMs where I'll set up accounts. So I'm able to manage the exposure as far as the risk. If I see something that's a red flag for me, I will get the manager on the phone, let them know, listen, I think you're oversized on your positions based on what your DDoc says. I think you're trading a particular product that is not listed on your DDoc. Could you explain that for me? So I look for little red flags like that, make sure that there's enough capital in the account for margin purposes, because we do have instances where exchanges will raise the margins in volatile situations. FCMs may double up the margin as well. So those are the type of things I keep track of on a daily basis. And then when I see something coming across the desk that the manager needs to know about, I will get on the phone with him or a Zoom call or what have you. And the same with the investor. I constantly communicate with my investors, let them know what's going on with their portfolio, because they need to understand, number one, the strategy, the risk, and the exposure.
Okay, it's interesting that you mentioned 35 years on the exchange floor. How did it help shape your mind as an investor?
Well, you develop certain skills as a trader on the floor, which help you to hone those skills as an investor because, number one, you're dealing in real-time market trading. And in real time, you have to be able to adapt and sometimes instantaneously to different market news or what have you. You also have to be able to read the environment, read your room, so to speak, okay, and develop the sense of the market noise, what's real, what's not. You're not traders who try to bully the market because they have positions. You have to know and decipher whether that's real or not. You have to look at other factors such as, one of the things I used in my trading as a helpful metric was the noise decibel in the room. The trading floors are very loud to begin with, but when you have an active session, typically the noise level goes up. And it usually goes up in whatever direction the market's going, whether it's going down or it's going up. And typically when I traded, I would look at the noise, or I would decipher the decibel of the noise. And if the market starts to inch upward and the noise level is going up, I typically would put on a long position and ride that noise wave. Okay? As the noise would ebb, I would get out of that long position, sometimes just go flat, sometimes get short if the noise increases on the downside. So that was a helpful factor, which you don't see on the screen trading today. You're not the screen trading is so, what's the word I want to use? So plastic that you don't see anything, right? You can't see through the walls.
It's a stream of numbers.
Yeah. All you see is numbers, green, red, that's it. And also with the screen trading, you're overloaded with a lot of data. You have screens up there. Typically, if you work with a prop firm or a trading firm, you have screens showing all different types of charts and news items and tickers and everything else that's going on. And sometimes that takes away from what you're trying to do as a trader because your focus is dispersed across different screens. On the trading floor, I was trading a particular product, whether it would be crude oil or cotton or cocoa, sugar, whatever it might be. I was focused on that particular market. The other noise...
Dennis, sorry, but there is some interdependence between the products, right? So if you don't see what is happening on other markets, you are disadvantaged.
Yeah, you're disadvantaged, but if you traded a particular market, and most of the time I traded for myself. If I was executing brokerage, it's a different story. You just execute, hit the bid, take the offer, whatever it might be. But if you're trading for yourself, yes, the other markets do affect, okay? And you'll see that effect in your particular market if it's a major news ad. So you basically go with the flow, but you try to stay disciplined to what you're trading and stay focused on that. I find the success of my career has always been the discipline aspect and not looking at the noise around me. That's not to say that I ruled out geopolitical events or macro events or hurricanes or crop disasters or anything like that. Yes, you factor all that in. But, the main purpose of what I was doing was trying to put on positions in various commodity spreads or outright long or short positions. And as a trader, that's what you want to concentrate on. As an investor, it's a little different. You have to know everything else that's going on. Right? You have to know where the news items or developments around the world, geopolitically, economically, or what have you, are going to affect the markets. And if you don't have an advisor, a consultant, or a trader that's not on top of those things, they may not react as quickly. Say, correct the losing position, or what have you. Manage the risk. So those are important things, obviously. But, you have to understand the markets you're trading as well.
Dennis, you know that not too many of our listeners and viewers have traded on the floor. And you already mentioned the noise in the pit, and it must be quite a tense environment.
The floor, number one, is a crowded place. On the trading floor that I worked on in New York Cotton Exchange, New York Mercantile Exchange, we probably had 3,000 to 4,000 people on the trading floor. Each pit probably had 100 to 200 traders in the pit. And depending on what commodities are being traded, they could be an actively traded session. But you're going to hear the noise from the other exchanges because on the trading floor, we had New York Cotton Exchange and one quadrant, we've had the coffee sugar exchange. In another quadrant, NYMEX in another, and COMEX in another. So basically, you're exposed to all that noise, and it's an intense environment. And yeah, still rivalries and everything else, because let's face it, everybody in the pit is doing a job. Either they're executing brokerage for their clients or they're trading their own capital for themselves. And it's a very competitive space with high stakes, all the time as far as, capital being turned over on the losing side, the winning side, and you have to react quickly. And you also have you have to have this psychological demeanor to know what's going on in the ring, what's going on around you. You have to know when to fold them, so to speak, because some guys never learned that. And unfortunately, those are the guys that left the business early because they got blown out. So it all comes back to one thing: discipline. And that's always going to be my key to success for any trader is discipline, whether it's in the ring, on the screen, online, whatever it might be. I have a poster behind me that I don't know if you can see it, but one of the things it says is trade your plan, not your emotions. Because you have to have a plan when you go into this business. You have to know what your parameters are for success. Stay within your goals. Not everybody's going to be a Paul Tudor Jones or Louis Baker. We know that. I've seen them trade on the board. They were both rulers of the cotton exchange when I was there. Some people are born to be legends. Others are born to be traders who make a living. And you have to understand who you are as a trader. And that's important. Because once you let your ego get to you, and let me tell you something, on the trading floor, tons of egos on that trading floor. Right? Everybody thought they were superstar or cowboy, gunslinger, whatever it might be, and then they found out, they weren't. So you have to keep yourself in check mentally, and also know what you have to risk. If you don't know what you have to risk, you shouldn't be in the game.
Okay, you mentioned some geopolitical events which obviously affect the markets. Can you provide any examples of you being on the floor, some geopolitical event happens, what is going on?
Oh, what's going on? For instance, years ago, when I was trading new crop, old crop spreads in cotton, December spot, December forward cotton spreads. There was only a few market makers that would do that spread. I was one of them with about 3 other traders in the country. And we all basically made a market where the commercials could hedge their product, futures and forwards. And we were able to do that with success for quite some time during the PIC program that was enacted by the U.S. Congress back in the 70s. Well, unfortunately, over the weekend, the PIC program was changed, to the detriment of the farmers where they weren't getting payment in kind. That reversed the spreads that everybody had up. So in that particular situation, myself and several other traders were hit financially because we had the spreads on the way they should have been traded basis the PIC program. Unfortunately, it was taken off the books, and we all took the financial hit back. So from that day forward, I learned one thing. Things change, and you have to adapt to change, but you also have to measure the risk on the things that you're trading for certain scenarios that may or may not come to pass. I didn't assess that risk at that point because it's a government program. Government programs change all the time. So I look at everything from a macro sense, a micro sense, and I try to analyze, what could happen. And if you have a scenario for that, you're able to get out of an investment decision much more quickly, returns against you, because you have to adapt. And going back to what you said about being on the floor, how did that change my mindset as an investor? Being on the floor, you have to react quickly. So you learn from that. You react quickly. You take that into the investment world as well. You have to react quickly. And sometimes you can't get married to a position, which is what many traders have done in the past. They get married to a position. They believe they have the best strategy on the planet. Their algos work. They're never going to change them. They're never going to tweak it until the point where they're getting redemptions because they didn't make any changes. One of my philosophies about being in this business as long as I am, and I started in 1977, right out of college, is that I was always adaptive to change. And I always knew that change would come. And I saw it, from my start on the trading floor back in 1977. I became a member in 1980. And I saw the way things have changed. Went from Quotron machines to high-speed computing and, pads and all this other stuff. We went from writing pencil to punching things in and everything else. And we went from trading on the floor to electronic trading. And, if you don't adapt to change over time, you're going to be left behind. And that's why I'm still in the business today, because I adapted to change. I'm no longer a floor trader. That career is over. So I had to adapt. What am I going to do to stay relevant in this business, which I love with the passion? I've been in it since, right out of college. And I adapted myself to find a way to stay in the business, knowing my skills and what I could bring to investors, what I could bring to managers. And that's why I developed my business, to help both sides of that fence.
Yeah, but thinking about the length of your career, you started in 1977. It was a period of high inflation in the US. You saw the beginning of the great bull market in fixed income, which started in about 1981, 82. And also we saw the invasion of the Soviet Union in Afghanistan and increased tensions between the Soviet Union and the US. We saw the collapse of the Soviet Union and the whole European security system. And then there was some peace dividend, and like a lot of things happened during these 35 years. Are there any examples of political events which affected the markets when you were on the floor?
Oh, yeah. Well, the first major political event was really the invasion of Iraq, Desert Storm.
That's 1992, right?
Yeah, that created so much volatility, especially in the energy markets, because everybody was anticipating the invasion or the attack on Iraq, because President Bush had announced it prior that we were going to go in and attack Iraq. And it was over the weekend that a lot of traders, especially in the energy complex, and I happened to be there at that time, liquidated their positions because of the uncertainty. Nobody knew what was going to happen, how to interpret an attack, because we didn't know what type of attack, what type of size would that attack be? Would it be a one-day event, or is it going to extend into a longer period? So a lot of traders liquidated their positions without trying to take on any more risk. Some traders put on positions regardless, and some have won big and some lost big. But that particular event changed the trading on the entire commodities exchange floor, even though it was dominated mostly in the energy markets. The gold markets reacted, silver, copper. The softs reacted because there was a possibility of disruption of supplies of some kind through that whole chain in the Middle East and what have you. So it affected everything. And, it was just a period of time where it was extremely volatile. That's when I decided, I'm not staying in the crude oil pit. I'm going to go back to the cotton pit because this market is too volatile. It makes no rhyme or reason. It's up $2 in 2 seconds and down 3 in 5. To me, that's not trading. That's gambling.
Did you lose money then?
Yeah. No, I didn't lose money because I didn't trade as much during that volatile period then. I was very cautious about the trades I put on. And when I saw the way it was traded, I decided, you know what? This is not for me. It's too rich for my blood. I'm not that type of trader. Let me go back to trade what I know best, which is spreads and the softs. And that's when I gave up my membership in NYMEX and hightailed it back to the New York Cotton Exchange, which at that time I think they had already merged with Coffee and Sugar, and they were now the New York Board of Trade. So, that's another situation where I mentioned you have to adapt to change. And that to me was a very intense change, which I was not ready to take on. So I adapted and moved back to where the volatility was less, the risk was less, and I could stay in my career. And unfortunately, a lot of energy traders who traded during that period did not last because the market was so wild in movements and on a daily basis that, if you had the wrong position on, you'd get wiped out real easy. And I saw that happen to several traders. So for me, it's always about making the right decision at the right time. And I think I made the right decision. And because I wouldn't have been able to handle volatility. I know I'm not that type of trader.
Interesting. Getting back to the relationships between traders on the floor, has it happened to you to have some conflicts with people around you?
Oh, yes. I mean, that was a very daily occurrence on the trading floor, not just for myself, but other traders, where we would have disagreements and, egos would step in. Sometimes it would get physical, even though.
Physical?
Yeah.
Can you give us an example?
Well, I mean, there was a situation, at one point in my career where another trader accused me of something that was not done, basically stealing a trade when I was just checking a trade. But he put an ethnic slur to it. And the ethnic slur I was accustomed to since I was a child, because I'm a minority in most circles. I'm Hispanic. And I grew up with that ethnic slur from grammar school, right through college, right through the trading floor. And at that point, my reaction was such that I actually attacked that gentleman. And I was escorted.
Like physically attacked?
Physically attacked, which, other traders have done that too. But my reasoning was not a trade-related thing. It was, the remark he made about me stealing a trade when I was checking a trade, that just bounced off my head. It just didn't mean anything because people say that all the time. The part that got me was the object spur. And at that point, I just went off the deep end at that point because I've been accustomed to it for over 25 years. I was 30 years old at the time, and I had just got married. So I had gone through that so many times in my career that I attacked a gentleman. I was physically escorted off the floor, suspended, fined, and threatened with expulsion because I violated every rule of decorum on the trading floor. A couple of days later, we had a business conduct committee. We had to explain ourselves and everything else. And once I explained that, I've been subjected to this type of ethnic discrimination my entire life, and I just snapped at that point. And I apologized for doing it and everything else. It was settled to the point where there was no expulsion, there was no suspension. It was lifted as long as me and the other member met and agreed to apologize to each other and make sure it never happens again, which we did. So things went back to normal after that. But those things do happen. I mean, we've had instances where other members were escorted off the floor because they were harassing women traders on the floor. So back then, you wouldn't be allowed to do that stuff today with the woke culture that has brought out everything else in the Me Too movement and all that. But back then in the 80s and 90s, it was like when I was in grammar school, the nuns could hit you, slap you, knock wood on your knuckles. They couldn't do that today, but it was a different time. But things have changed since then. And I think one of the benefits of my physical attack on the other member was that the membership committee decided to call all members to a meeting, and announce that would never happen again. And if it does, the member would be immediately expelled. And no questions asked. And this is not who we are. And as a result, we started that movement on the exchange where that never happened again. Because they enacted rules that were much more stricter and more finalized in the decisions that could be made upon something like that. And then the other exchanges followed suit after that. So, we were a little ahead of the curve on so-called wokeness and discrimination and all that other stuff, but it kind of changed the exposure on the court, things like that.
You mentioned harassment there on the floor. It's quite a big topic, obviously, and as you mentioned, the attitude to this problem has changed dramatically over the last 20, 30 years. I can't really imagine, like even today's investment industry, there are not too many women. I would presume that there were not too many women on the trading floor.
Not when I was there, no. There was probably half a dozen or so traders. I'd say as far as the employees and clerks on the floor, whatever that might be, they probably represented maybe 1 or 2% of the entire trading floor.
It must have been very difficult for them.
Yeah, because look, especially if you were a pretty young lady, you got the abuse, you got the catcalls, you got the whistles and that other stuff. It wasn't a business that was easily adaptable for women back then. Today it is. Today it's more adaptable, although we don't have the trading floor where we could judge on that. But I mean, women have become more accepted in this industry than they have back then, and they're a major part of it right now. I mean, there are some fantastic women hedge fund managers who own their own asset management firms and local advisory firms and everything else. So they're a welcome addition, and they're a respected addition to this industry, which like I said, everything changes. It's all about change, and the attitudes in every business has changed over the years, not just ours. And certain people in certain categories of the business population have developed over time, become accepted, whereas years ago it wasn't accepted. I mean, my father-in-law was a homicide detective at NYPD, and he started when he was 20 years old, but he was a Jewish man, starting in NYPD, which was predominantly Irish populated. So he had to go through that period of discrimination as well. And he made his bones all the way up to being a first-grade detective, before he retired. So, everything changes in time. As we've seen over the years, most of the change that we've seen in this industry has been for the better. Unfortunately, we've had some bad actors that have seen this in many instances, whether it's in the futures, equities, digital, FX space. We've all had our bad actors who managed to weed them out, and that's where new regulations come in to try to rein a lot of this stuff in. And that's why I go back to saying with the young traders or the managers I look at, I stress on them. Stay on top of the firewall, stay on top of the regulations, stay on top of cybersecurity, because these are important things that could destroy your business. You're not on top of it. You may miss a specific rule and get audited and get fined where you can't afford that fine, and you got to close up shop. So, yeah.
Getting back to your episode where you had to get physical, I can imagine that you realized that you could be expelled from the exchange. How did you feel overnight? I imagine you came home, you spoke with your wife. So how did it feel?
I was devastated. I mean, I didn't sleep the whole weekend because that happened on a Friday. The decision was to come out till Monday morning after the Business Conduct Committee had met with us. But I was devastated. I thought I killed my career. I had worked so hard to get into that career, and I thought in one shot I just destroyed it. So it was a very nerve-wracking, stressful period, especially that entire weekend. I was remorseful and apologetic, not just to myself, but to the exchange members, that I actually put them in a spot where they had to do something drastic like that to have me escorted off the floor by security and suspend me and what have you. So it was a very stressful period. I guess because of my previous life's history of enduring that year after year after year, grammar school, high school, college, trading floor, et cetera, sometimes you have to protect yourself. And I think what I did at that point was not just snap and react to the comment, but I also felt if I just stood there and do nothing, it would continue. And it would drive me out of business that I won't be in. And I felt if I don't fight myself and try to correct this, no matter what the consequences might be, other members may take advantage of that and do the same thing. And it would get to the point where it's uncontrollable. And I would either have to leave or be physical with somebody and get expelled, or, just take it and be meek and mellow. And then what happens when a trader is meek and mellow on the trading floor? They get ignored. They typically,
How can you ignore someone on the trading floor?
well, basically, if I'm bidding 20 for deck and the guy next to me is bidding 20 for 2 deck and I'm bidding 20 for 5, he's going to get his 2 before I get my 5. That's how it works. The people just say, I'm not trading with that guy, So, unless he's got the best bid, yeah, I'll hit him because I want to make money. But if he's got the even bid with the guy next to him, I'm going to hit the guy next to him. Let somebody else go his bid. But I'm not going to bid because there were traders like that. They just ignore you because they don't like you.
Sounds like a jungle.
Well, yeah, but you know what? To me, you had to take part of that in and just brush it off, so to speak, because it was a camaraderie. I mean, look, we try to pick each other's pockets during the day, but we were friends after the market closed. We would go for drinks to the market bar with St. Charlie's or whatever. We would golf on weekends. We would go out to dinner and dates with our wives, girlfriends, et cetera, and we'd all get along. And we had a great camaraderie. I was a member of a bridal party for several members on the floor, and they were also members of mine, because we had that camaraderie. And unfortunately, with 9/11, a lot of colleagues were lost to that tragic event, and that really brought out how close we really were. Because, you take advantage, so to speak, of what's around you at times, but you don't see the real picture, how close everybody really was. And that tragic event, unfortunately, really brought about, even though we knew we were close. We would traded every day in the pit and cursed at each other and, pushed each other out of the way to get into the pit, stuff like that. It was very peaceful. But, like I said, we all got along at the end of the day. We were doing our job. We were trying to make a living, trying to fulfill an order for a customer or client, what have you. And we had to do it the best way we could. And sometimes it had to get physical and nasty and all that other stuff. But, in the real world, down there on a trading floor, we all miss each other to this day. We all wish the trading floor was still there because we had that camaraderie. I liken that camaraderie to what you see in the police force, in the fire department, union, stuff like that, where everybody considers themselves a brotherhood. And that's basically what we had.
Yeah. Dennis, with such a vast experience of being on one side, i.e. on the trading side, and on the other side, i.e. on the investor side, what advice would you give to, let's say, hedge fund managers, if you can formulate it in 3 bullet points?
Well, I would first, I'll go back to is what I said at the very beginning. Develop a very disciplined risk management framework. That's important. A lot of investors always look at performance and track record, but what they fail to see is how do they get there with that performance and track record. And the good traders got there because they've managed their risk very well. Okay, they kept the drawdowns to an acceptable level. I always tell traders who I'm sizing up, especially startups, guys who are just getting into the business and looking at me for advice on how to develop their business, how to develop their strategy. And I always stress the risk part. And they say, yeah, but I'm going to return 20%. I says, look, you're not going to return 20% if you're not managing the risk. Okay? Because I've seen traders that had the strategy where they're up 40% one year and down 60 the next. That's not risk management. That's just a volatile trader that traded the market momentum at the time and getting caught several times along the way. And the other thing I stress to managers is always have that transparency and communication with the client. If you don't have the transparency and the communication, the client typically may redeem his capital. And I've had that happen to some traders. And I tell them all the time when I onboard them to a new client, say, look, we need to stay in constant communication with the client, especially when you're in a drawdown. Don't let the client call you while you're in a drawdown. You reach out to them. You let them know what's going on and what your plan is to get out of it. They appreciate that more than just sitting back looking at their returns on a P&L statement and trying to figure out what the hell's going on. So it's got to be that communication aspect. I had one investor withdrew money from a manager because the manager was in a drawdown for 3 months and never bothered to get on the phone with me or him. And I said that, I told the manager, I said, that doesn't work. Oh, well, that's the business. We have drawdowns. Yeah, we do. But you know what? The investor, it's his money. It's not yours. So, and the other thing, like I said again, they have to understand the regulatory compliance. So it's risk management, it's communication, and regulatory compliance. Those are the three big things I would stress to a third-party manager.
Okay. And 3 bullet points of advice to allocators.
Well, to allocators, I would stress to them, number one, your money, you have to understand the strategy. Number one. If you don't understand the strategy, you shouldn't be investing it. Okay? I mean, if you're a real estate developer and you're investing in real estate, you know what you're investing in. Well, if you're just looking to diversify your portfolio with the futures strategy, you have to understand that strategy. And you have to understand the risk and volatility of that strategy as well. Okay. And so understand the strategy. You have to assess the risk. Okay. And what you could bear in that particular strategy. Because let's face it, commodity future strategies are all over the place as far as volatility and risk. Okay. I don't want an investor to say to me, oh, just put me in an energy trade, or I want to trade energy. Well, that's fine, but what's your risk tolerance on that strategy? How much could you take on a particular investment? Let's say $1 million minimum investment, notionalize it 40, 50%. What's the risk tolerance on that? If you tell me, oh, I don't know, it's energy, I'm not going to take that investment. Because I have to know how far could this guy take the loss. So they have to understand the risk, they have to understand the strategy, and they also have to understand the manager. All right, so I stress to the investors, even though I do the due diligence on the managers, I want them to read the disclosure document. I want them to read the DDQ, okay? They have to understand everything about that trader because I'm sending them all that information. I'm sending them the DDQ. I have the due diligence questionnaire that I put out in front of all the managers that they have to complete. It's 22 pages long. And if they have a problem answering any of the questions, they get on the phone with me and tell them, this is what I'm looking for in that answer. Try to articulate that, this and that. So it's a very detailed due diligence questionnaire. A disclosure document, obviously if it's prepared by a compliance firm, it's very detailed. I want the investors to read that disclosure document, not just say, okay, I'll accept it and not read it. I have to read it. And the last thing I would say is, as far as that due diligence on a manager, even though I'm doing it on my own through my firm, reach out to other investors who may have invested in that manager. Okay. get references from those other investors. Reach out to other service providers. Let's say you're an investor who has accounts all over the street. Let's say, for instance, in the commodity space, you have an account at RJO, you have an account at ADN, you have an account at StoneX. Reach out to those firms and ask them if they've had accounts with this particular trade. What's their experience with that trade? Because even though I do my job and I do a good job for my investors, it's always good to get as many sources as you can to understand who we're dealing with and who's going to manage your money.
Thank you very much, Dennis. This is a very valuable piece of advice, and the stories you told me are just fascinating. I'm sure that our viewers and listeners are going to enjoy them.
You're welcome, Igor. You have a great afternoon or evening, whatever it is out there, and have a great weekend as well.
Thanks for listening. This has been Capital Horizons.
So if you would like to see or learn more about Capital Horizons, please subscribe below.
From Michael and I, see you next time.